Hello there, welcome to Trade of the Week. Now, if you watched last week's show, then you'd know that Josh Mahony, who was here, chose to go long on the cable, didn't you? And when you chose, it was kind of a flip of the coin situation. You weren't quite sure, you just went with it in the end. Can you conclude to us how it panned out?
So it was probably the worst start to the week possible. And the reason that I was unsure about it was because of the fact that we've got such potential sort of unexpected releases in terms of these polls, and you don't necessarily know how it's going to play out.
Yeah.
I ultimately am long, in terms of sentiment. I think that this is very cheap in terms of cable, and I do think that over the next, say, 2 or 3 weeks is going to play out, but that's based on the fact that I think that we're going to remain, and the IG binary would say the same. But some of these polls that are coming out, whether they could be trusted or not, how big the sample size is, where they're actually taking place, it's difficult to ascertain how much importance to attach to them. But ultimately, one thing they do is that they move this market heavily. And actually, before we actually open the trade, so before the week actually begun, we actually saw a load of polls coming out over the weekend. We saw cable actually drop very heavily towards the downside, so it pretty much negated that trade from the outset, quite honestly. We'll go through what's happened in terms of cable this week, because it's actually very interesting, because the key level that I was talking about here is 143.48, and the fact that we've now broken through there is certainly a warning sign, and says a lot about the fact that market sentiment within financial markets is shifting away from this very sort of bullish theme that you had when we saw this inverse head and shoulders breakout and everything started looking very rosy. People were starting to think this is very cheap because we think that we're going to remain. All of a sudden, you're starting to see real amounts of doubt creeping in, and people are now thinking, geez, what would happen if we didn't remain? And that really is feeding into this negative sentiment that we're seeing at the moment. Now you can see across a lot of the other currencies that we've seen massive strength in terms of other currencies against the US dollar at the beginning of this week, and then weakness against the US dollar for the back end of this week. Well, cable seem to have some of that early strength, but a lot of that later weakness. So really that says a lot about what's going on in terms of sentiment surrounding cable. So didn't particularly work out on this occasion, and I guess the lesson learned is when you have got a currency pair that's being so influenced by something that could have a news release at any moment, you don't know when it's going to come out. Similar kind of thing when you've got sort of crisis talks in the Eurozone. Potentially that's not necessarily the best thing to be trading, so that's a lesson learned from me.
All right, lesson learned. So next time, what are you going to do? Presumably something entirely different.
Well, this is the thing, right? So this week's quite difficult because of the fact that we have got markets essentially, so you've seen massive upside in terms of the sort of risk assets recently, in terms of indices really breaking higher and alike, but then all of a sudden you're now starting to see that reverse, and we're seeing widespread selling in terms of indices, and you're starting to see people really going into this sort of risk off mode. And I think a lot of that is because of the fact that people are worried about what's going to happen in terms of this Brexit scenario. And we saw a big move in terms of the payrolls number, and then we're seeing that reverse in terms of US dollar. So I'm trying to get away from the US dollar. The way that I thought that I would do it is I would try and find 2 different currency pairs against the US dollar that I think one looks bullish, one looks bearish, and then be able to trade them against each other, and you'll somewhat negate the big swings that you'll get in terms of the US dollar. What I came up with is euro against the Australian dollar. Now, if we look, this is the daily, but if we look in terms of the weekly time frame, we're at an interesting point. You can see that we've largely topped out here. We have been creating these lower highs, so there's a good chance that we're seeing another lower high coming into play at the moment. We've seen one big move towards the downside so far this week. You can see we've got the stochastic overbought, and generally when we see it around about overbought levels, often it will turn lower. So there's a potential that we could be seeing the beginning of a sell-off in terms of this market. Again, switching it into the daily time frame, you can see that we've been seeing largely sort of consolidation within this market so far. And that can really be seen a little bit better in terms of the 4-hour chart, where you can see that it's been largely sideways. So for me to negate essentially the potential for this to be a bottom, for us to be rallying into this area, I would say that I would be looking to place my trades on the breakout from this sideways range. So if we're looking at, say, the hourly time frame, we'd be looking at an hourly close below, say, 15203. You can see previously it's tried to break below that but failed to do so. If we get an hourly close below there, then I'd be happy to be selling it at that point and then putting my stops up above this area of consolidation. If we don't get that, then we don't get that. We could see this essentially creating this rounded bottom for a retracement higher before another leg lower. So Whether we're going to see the next leg lower out of this consolidation or not remains to be seen. But if we do get the hourly close below 15,203, then I think that'll be a good opportunity to see another decent leg lower in terms of Euro Aussie.
Okay, something entirely different really, isn't it? And what other macroeconomic data do you think will play into that currency pair? Anything significant to watch out for next week?
There's not a massive amount of data coming out in particular for the Euro or the Aussie, quite honestly.
And is that a good thing?
I think it is. I think the one thing that's really going to impact this, and this is why, I guess what's happened in terms of last week's trade of the week really goes to show that actually it makes more sense to be looking at this from a perspective of what would you be looking to actually see for the beginning of next week, rather than, I don't like ever holding trades over weekends, quite honestly. And we've got a similar kind of thing this week because we actually have Chinese retail sales and industrial production figures coming out at the beginning of this week, like really early on Monday. Now that's the kind of thing that can really impact the Australian dollar, and therefore it's going to be very interesting to see. That could be the spark that actually could send this chart below that support level to be able to then all of a sudden instigate that trade. It could see it go the opposite way, but I think that's going to be a really big sort of mover in terms of volatility for the Australian dollar, and of course that has big implications for this currency pair.
It's very interconnected, isn't it, the Forex world?
It is, yeah.
It's a domino effect, the butterfly effect, if you like. All right, Josh, thank you very much. That's really interesting. We appreciate that, and we hope that you learned something as well with your trade of the week, and good luck with whatever you decide to do, and of course get those stops on as well, as we always say. So thank you for watching. Have a fantastic weekend. I'm going to go to the parade because the Queen's 90, isn't she? So I'm going to wave the flag and have a bit of fun there, but goodbye.